Want to start investing but don't know where to begin? With 2025 around the corner, the financial landscape is changing, and smart investing is the key to building wealth. Whether you're a student, a young professional, or just looking for passive income, this video will break down the best investment strategies for beginners in 2025. Make sure to watch till the end because I'll share a bonus tip that most beginners miss. Let's get started. Alright, let's talk stocks. Whether you're a seasoned investor or just starting out, understanding stocks is crucial. Now I know what you might be thinking. Stocks, isn't that risky? It's a common concern. And yeah, like any investment, there's always going to be some risk involved. But with the right knowledge, you can manage that risk effectively. But listen, stocks have consistently outperformed other asset classes over the long term. We're talking about decades of growth. And by long term, I mean decades, not months. Patience is key when it comes to investing in stocks. Think of it like owning a tiny piece of some of the biggest and most successful companies in the world. That's what stocks are. It's like having a stake in their success. And when those companies do well, guess what? You do well too. Your investment grows as they grow. In 2025, there are a few key areas within the stock market that I think are particularly interesting for beginners. These areas offer a good balance of risk and reward. First up, index funds and ETFs like the Nifty 50 or the S&P 500. These funds track the performance of a group of stocks. These are like the all-star teams of the stock market, giving you a diversified slice of the top-performing companies. It's a great way to spread your risk. They're generally considered lower risk than individual stocks, and they're a great way to dip your toes into the market without having to become a full-blown stock analyst overnight. It's a smart starting point. Then you've got your blue-chip stocks. These are the stalwarts of the stock market. These are the big, established companies that have been around for ages and have a proven track record of profitability. They offer stability and steady growth. Think Tata, Reliance, Infosys. These are the heavyweights of the Indian economy. Investing in them can be a safe bet. They're not going anywhere anytime soon, and they can provide some stability to your portfolio. They are the backbone of a solid investment strategy. But if you're looking for some serious growth potential, you might want to consider growth stocks. These stocks can offer significant returns. These are typically companies in emerging sectors like technology, artificial intelligence, or renewable energy. These sectors are poised for explosive growth in the coming years. Now I get it, not everyone has the time or the desire to spend hours researching individual stocks. That's where mutual funds come in. Think of mutual funds like baskets of stocks or bonds managed by professionals. And the best part is, you don't need a ton of money to get started. With a systematic investment plan, or SIP, you can invest a small amount of money every month into a mutual fund of your choice. It's like setting up an automatic savings plan, but instead of just sitting in a savings account, your money is out there working for you, earning potential returns in the market. Now, when it comes to mutual funds, there are a few different types that are particularly suitable for beginners. You've got equity mutual funds, which primarily invest in stocks. These funds have the potential for higher returns over the long term, but they also come with a higher level of risk. They're a good option if you're investing for a long-term goal, like retirement. Let's be real, buying property outright, that's a whole different ballgame, especially with these ever-rising property prices. It's a huge commitment. Not just financially, but also in terms of time and effort. But here's the thing, you can still tap into the real estate market without actually having to buy a physical property. How? REITs, my friends, real estate investment trusts. REITs are like the more accessible, less demanding cousin of traditional real estate investing. They're companies that own and operate income-producing real estate properties, like shopping malls, office buildings, or apartment complexes. By investing in REITs, you get to participate in the potential profits of the real estate market without the headaches of being a landlord. You earn rental income, you benefit from any increase in the value of the property, all without needing a mountain of cash up front. Chapter 4, Gold and Digital Gold. The glitter is real. Gold, man, it's been a safe haven asset for centuries. Even when the market's going haywire, people flock to gold because it holds its value. It's like the ultimate insurance policy against economic uncertainty. But let's be honest, lugging around gold bars or stashing them under your mattress isn't exactly practical or safe. So, what are your options? Well, in 2025, there are smarter, more modern ways to invest in gold. One such option is sovereign gold bonds, or SGBs. These are government-issued bonds where each unit is linked to a specific quantity of gold. The best part? No storage hassles, and you even earn interest. It's like a win-win. Then you've got gold ETFs, which are exchange-traded funds that track the price of gold. They offer better liquidity compared to physical gold and can be easily bought or sold on the stock exchange. Chapter 5. Cryptocurrency and Blockchain Navigating the Wild West. Alright, let's talk crypto. I know, it's like the Wild West of the investment world, full of volatility and uncertainty. The market can swing wildly in a matter of hours, and fortunes can be made or lost in the blink of an eye. And yeah, it's definitely not for the faint of heart. The emotional roller coaster can be intense, and it's easy to get caught up in the hype or the fear. But here's the thing. Despite all the ups and downs, cryptocurrency and the underlying blockchain technology are here to stay. They're not just a passing fad, they're a fundamental shift in how we think about money and transactions. They're transforming the financial landscape as we know it, and ignoring them completely would be like burying your head in the sand. The potential for innovation and disruption is enormous. But remember, with great potential comes great risk. It's crucial to do your homework and understand what you're getting into before diving in. So how do you navigate this space as a beginner in 2025? The key is to start slow and educate yourself. Don't rush in with all your savings. Well, first things first, stick to the established players, the ones that have stood the test of time, relatively speaking of course, because crypto time is like dog years. These are the projects that have proven their resilience. Bitcoin and Ethereum, these are the big dogs, the ones with the largest market capitalization and the most established track record. They have a level of trust and recognition that newer coins lack. They're still volatile, but they're considered less risky than some of the newer, more obscure cryptocurrencies. Then you've got stablecoins. These are designed to offer more stability. As the name suggests, they're designed to be more stable than traditional cryptocurrencies, often pegged to the value of a fiat currency like the US dollar. This makes them a safer entry point. They offer a way to dip your toes into the crypto world without exposing yourself to the same level of volatility as Bitcoin or Ethereum. It's a more measured approach to entering the market. And finally, keep an eye on Web3 and blockchain projects. These are the cutting-edge developments that could shape the future of the internet and finance. This is where things get really interesting. The potential applications of blockchain technology go far beyond just currency, promising to revolutionize various industries. Chapter 6. Fixed Deposits and Bonds. The reliable, slow and steady. Look, I get it. Not everyone's cut out for the roller coaster ride of stocks or the crypto craze. The constant ups and downs can be nerve-wracking. Some people just want a safe and reliable place to park their money and watch it grow slowly but steadily. They prefer peace of mind over high returns. And you know what? There's absolutely nothing wrong with that. It's a smart choice for many. That's where fixed deposits, FDs, and bonds come in. They offer a sense of security and predictability. These are your classic, low-risk investment options, perfect for preserving capital and earning a fixed return. They are ideal for conservative investors. In India, fixed deposits are offered by banks and financial institutions, and they typically offer interest rates of around 6 to 7%. It's a stable choice. Not exactly going to make you rich quick, but hey, it's better than letting your money sit idle in a savings account, right? At least it's working for you. Then you've got government bonds, which are considered one of the safest investments out there. They are a solid choice for risk-averse individuals. They're backed by the government, which means they're extremely low risk. You can sleep easy knowing your money is safe. And while the returns might not be as high as some other investment options, they're still decent, especially in times of economic uncertainty. It's all about balance and security. And that's a wrap. Now you know the best investment strategies for beginners in 2025. Which strategy do you like the most? Comment below. If you found this helpful, hit the like button. Subscribe for more finance and investment tips every week. Follow me on your social media for daily money tips.